Hi, everybody. Welcome to the 19th episode of Rev Rag AI podcast. I have today Chirag Jain, who heads the digital initiatives at HDFC Bank and leading the DPI and Gen AI initiatives overall at HDFC Bank. So, Chirag, would love to know a little bit about you, right? And then probably kick off this podcast.
Hey, hi Ashutosh. Thank you for having me on the podcast. Just a quick disclaimer before we get started. So this is completely in my personal capacity and nowhere represents the bank's view. So I just want to take care of the corporate communication policy. Anyways, Ashutosh, I'm lucky that I do what I really love doing, and as part of that, I am currently leading the whole digital public infrastructure piece, in addition to certain strategic projects. And as part of that DPI, I'm building an intelligence stack using the AI layer. So the
Right,
idea is that DPI should evolve into something which can really solve problems at scale by leveraging the analysis capability and real time artificial intelligence power which we have now.
right.
So my yeah,
No, no, please go ahead. Please go ahead.
yeah. When I started my banking career, it was I was a techie at heart, but ended up in banking. And I can say
Mm,
probably that the first role and first job was not of my choice.
mhm.
But as I progressed in the career and the fundamentals which I learned about the banking in first few years, it eventually really made the transition really easy to move to a fintech role because I understood the fundamentals of banking, and then tech was something which was coming always very naturally to me.
Absolutely.
So over a period of time, and at the very beginning of my career, I learned, and I used to be a huge fan of Charlie Munger, and I learned something about having a building a framework of mental models, a lattice work
Mm,
of mental models, and that's how I planned my career. I
mm,
started in liability understood processes, then moved to working capital, digital initiatives, digital strategy for Axis Bank, uh, launched a full stack GST filing platform, then moved to managing payments at HDFC Bank. So the idea was that every 3 years I wanted to do something new,
mm,
and that is something which helped me from learning the full stack of retail side of the business. And eventually couple of years ago I decided, now I understand payments, I understand lending, I understand liability, I understand
mm.
digital. Let me move to something where I can add value across, and that's where
Right,
I chose. I put my hands up and I said that I want to do something purely in the DPI space, because DPI I always saw, be it DigiLocker, be it account aggregator, UPI, everything touches across the whole life cycle of the customer in their financial journey
right.
from
So
every
for
product you.
if you can like a little debunk for others, right? What is digital public infrastructure, right? Uh, what are these like how it is maintained, how to like what it is actually, right? For a let's say 10-year-old, uh, if you can like debunk that.
Oh, that's good. So digital public infrastructure is basically using the public utility which government has built to serve citizens in a digital non-paper manner. I'll give a very
Mhm.
simple example. When we were kids and when we had to go and open a bank account, we had to carry huge stack of documents, including even our 10th class certificate, which used to be our birth proof of date of birth. But eventually when Aadhaar came, We started carrying our Aadhaar in early 2010s, in the first half of the last decade, to start doing the KYC.
Right.
Now, today, it has evolved completely where I am sitting here and I can open your account without you and me ever meeting. Simply because there is a identity mechanism which is available digitally, which is consent based. So, only if you agree, then only I can pull your data, and which also authenticates your identity on a real time.
Makes
So,
sense.
in a very, very simple language, for a 10-year-old, if I explain it, if you are entering into a expressway, the Aadhaar acts like a toll gate.
Mm,
It is the identity mechanism which gives you the entry. Then
mm,
the next DPI, which we talk about very regularly in the country, is UPI. That is the payment rails of that expressway, which
right.
allows you to drive commerce at speed.
Mm,
And then now the new kid in the town, but growing very fast, is account aggregator. An
right.
account aggregator as a DPI has probably one of the most powerful ecosystem which is coming, uh, which can add so much context. It can actually fuel the next level of fuel the next level of innovation in the country, in the whole financial
Right.
ecosystem.
No, thank you so much for doing that. So I have few questions around that as well for you, right? So now, as we all know, like we have spent a lot of time and money building these foundational rails, right? Which is like, let's say, UPI, KYC, digital identity, as you were explaining as well, right? So, do you feel we have reached a point where digital access is no longer a differentiator, meaning these things are table stakes now for any bank? And if you think, then what can be, w- 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 how it is being used, and what can be a differentiating layer?
So you rightly said that digital access is no more a differentiator; it's a baseline. It's where
Right.
you are starting.
Mm,
But the differentiation lies in the execution, how you use the DPI to create a wow experience for the customers.
right.
With Aadhaar, with face match authentication mechanisms, with CKYC 2.0 coming in, or even account aggregator, DigiLocker, it enables you to service the customer where the customer is residing at
Mm,
their own time, at their own space, and at their own comfort.
mm,
Now, the next level of differentiation and wow movement comes when you marry this DPI layer with the intelligence which AI brings in. And
right.
that's when you marry these two things, it becomes a DPI 2.0, what we call as intelligence stack.
Mm,
Now, this is the intelligence stack which which any organization needs to start leveraging smartly,
mm,
so that when a customer walks into a branch,
mm,
the customer doesn't, or even any digital touch interface, whenever a customer is interacting, the
mm,
customer doesn't have to go through multiple checkpoints of proving who he is, and he is who he is claiming to be. It should be as simple as that. With a face authentication, the his live photo can be matched against the Aadhaar database,
mhm.
and his onboarding can begin by pulling the same information either from DigiLocker or the CKYC where he has earlier taken any financial product in the industry.
Right.
Banking needs to have its DigiYatra movement. Like in
Right.
DigiYatra, when we first time all of us used on any of the airports, it was kind of a wow moment that we could simply skip through the queues. Now, the same skipping of the queues, which I call paper queues, bureaucratic queues, needs to happen in the financial industry also by leveraging this intelligence stack.
So, as you rightly said, so for because all of these stacks are mostly used in onboarding use cases, right? When you say account aggregator, when you say KYC, except the UPI thing, but all these stack which are primarily while used while a new customer is getting onboarded, do you think they will help reduce the drop off that happens during these onboardings, right? Will the onboarding of the customer become really swift from what it is today?
See, that is going to definitely happen, and it is may happen within this year. The reason is earlier the face man authentication mechanism which were there, they were very heavy. The backend logics or the codes of doing the face match, they have
Mm,
evolved so much over last couple of years that now, and with UIDI and DigiLocker also launching the capability to do face auth mechanism,
mm,
the whole friction can go away if instead of moving to OTP based or another any other biometric based, I simply start using your face to know you as an individual and then match your identity.
mm.
And that friction will reduce over a period of time when more and more institutions start utilizing that. Because when the technology adoption happens at scale, not only the cost of technology goes down, but the customer uh, ease and comfort and trust of using the technology also
Absolutely.
increases.
Absolutely. Yes.
So imagine a customer experience where customer comes to your website and he says, I want to
Hmm.
open an account.
Right.
And the very first step you are asking after a mobile number, can I capture your photo to
Makes
check
sense.
your
Yes.
details? Now, basis the mobile number and photo, only these two parameters, you can run and fetch all his details from
Hmm.
either a CKYC database, a newly
Hmm.
launched, or directly start authenticating his face match against the information you have fetched from Aadhaar linked to that mobile number. Now,
Hmm.
the moment you do that, you have all the information which you needed to open a savings account for that customer. You have all the information coming directly either from DigiLocker in the form of
Hmm.
Aadhaar or PAN or from CKYC.
Hmm.
Now, with these two, with your just mobile number and face, I am able to fill a complete application form, barring couple of additional information which I can ask through a voice based agent also about your income, your source of funds, and
Absolutely.
done. That's all the rule engines, all the checks will run in the backend against all kind of fraud list, negative databases. The customer will not even know. All he had to do was just enter his mobile, show his face, and answer a couple of questions about his demographic, and he's done.
Absolutely.
So this is
Makes
the
sense.
kind
I
of
think
experience which is going to happen very soon.
absolutely. I really enjoyed the way that you put it, right? Uh, so there is a digital journey where the new intelligence stack will be on top of it, and then there will be new type of AI as well, which we can leverage, which is the voice AI or the voice modality, combining it together to give the experience to the customer on that journey, where the drop-offs will be reduced. I think I totally agree, and at Revrag as well, we have a core belief of actually that the AI will actually change how we onboard users today, right? So I think you rightly mentioned. You also mentioned that AI use cases to an intelligence stack, right? Uh, for a business head listening overall this podcast, what is the fundamental difference between a bank using AI for a particular use case, whereas kind of re-engineering overall AI-driven intelligence stack? So what do you and how do you put it together, right, for a business uh, head?
See, Ashutosh, we can always explore AI as a set of tools
Mhm.
across multiple fragmented use cases,
Right.
but that will only lead to just creating a glimmer of hope without any real impact.
Mhm.
I see it differently. I see that what DPI has standardized,
Mm.
in terms of identity, in terms of information access, in terms of
Mm-hmm.
payment ability.
Mm-hmm.
What DPI has standardized, AI can hyper personalize.
Mm-hmm. Right.
So, using AI on top of that intelligence stack, you can not only fulfill customers' financial needs in a hyper personalized, life cycle based, and I would say contextually aware manner,
Right.
but you can keep a wow moment.
Mm.
And that is the fundamental difference. In fact, I'll take an example of one of my favorite subjects, which is account aggregator. So when you leverage data from account aggregator
Right.
across multiple accounts, 360-degree financial view, the
Mm.
GST filing of a sole proprietor can also
Mm.
you can pull directly from account aggregator. And when you match these
Absolutely.
two things, the cash flow coming from a bank statement, the
Mm-hmm.
GST filing where the actual invoicing is happening, and you
Right.
triangulate that data on a real time, AI
Mm.
can analyze his actual cash flows against
Mm.
invoices,
Mm.
understand the gap in receipts versus payments,
Right.
and anticipate business cycles in each quarter when
Makes
there will be
sense.
a need for working capital.
Mm.
New products such as a dynamic overdraft limit,
Mm.
matching the small merchants business cycle can be offered while reducing the risk at the same time, the cost at the same time, because you can now do a sharper monitoring with the
Mm-hmm.
consent mechanism which account aggregator provides. You can
Mm-hmm.
automate collections using
Mm-hmm.
AI, eNash, and again account aggregator data, and that will
Mm-hmm.
lead to reduced credit cost. And
Mm-hmm.
Ashutosh, what's the beauty of all of this? When your underwriting cost, your credit
Right.
cost, your operational cost of collection reduces, your
Right.
rate of interest goes down. And
Absolutely.
when rate of interest goes down, the loans become, the credit becomes more affordable. And affordability will drive next level of acceleration for credit demand, for demand of financial inclusion.
No, no, I totally agree. And uh, you rightly said that account aggregator, as of now, I think it's just like we are just scratching the surface of it, right? We have not
Yes.
really started using it massively, right? It is still getting adopted. We even work with an account aggregator. We are doing a pilot and building a voice-based account aggregator with Finwu, right? One of the top account aggregator of the of the nation, right? So, and I totally agree, right? It's a digital framework which actually will be able to will be leveraged in order to give uh, more structured data, right? And so, what do you call it, right? If you want to give one name to this system, what will you give the name to the system, right? So, account aggregator, combining all the data together and uh, giving access to the bankers, giving access to the fintechs, giving access to the organizations which really need this kind of data in order to analyze and better underwrite that customer. What do you call it, right? Is there one name to it, which you can tell, right? Or there are people
So
still
I have
still
been working with DPI now for many years, and I genuinely feel that account aggregator is becoming the crown jewel of DPI.
right.
Yeah. I strongly believe that account aggregator can be the crown jewel of the whole DPI piece,
Hmm.
because it can enable segment of one banking. See, account aggregator provides you a high fidelity, structured 360-degree view of customers' finances
Hmm.
directly from the source, which is your financial information providers.
Hmm.
Any smartly built intelligence layer on top of it can enable hyper segmentation at population scale at a very low cost. What
Hmm.
we call segment of one banking,
Mm-hmm.
each to his own.
Mm-hmm.
So I'll give a very simple example. A lot of viewers or listeners might be parents planning their child's education, filling school fees. So if a
Mm-hmm.
parent links his bank account, deposits, and investment to a personal finance manager app of a trusted bank, the
Right.
bank can start becoming true partner in customers' financial life. How so?
Mm-hmm. Mm-hmm.
Rather than force fitting or pushing a child based ULIP,
Mm-hmm.
the bank can detect large school fee payments,
Mm-hmm.
match it with customers' age, location, spend patterns, identify investable surplus on an ongoing basis,
Mm-hmm.
and then nudge that parent to start saving in mutual funds, a time frame based goal or asset allocation based plan for child's college education in a sachet manner.
Mm-hmm.
Not only that, a smart AI layer built on top of it can even analyze customers' existing investments, act as a full fledged financial advisor, and guide the parent for options around structuring future life cycle or life based milestones, including not only limiting to education but things like creating a seed capital for the child's business or even planning their retirement. But all of that currently people are doing in a very scattered or fragmented manner.
Mm-hmm.
AI plus AA can bring all of that information into a one piece and create a very coherent story
Mm-hmm.
which anyone can follow.
Makes sense. Mm. No, no, I too agree there. So account aggregator is a very I think the word that you use, crown jewel, is a very good word for account aggregator. I think it is going to unlock tremendous value in the overall system. So now we'll move to the next part of the podcast, where as we know, like many institutions are using Gen AI, but majorly what at least we are seeing is there are two areas that AI is being used, right? Either it is very internal systems, right? Whether it's coding, whether it's automating some of the internal materials, right, for internal efficiencies. But 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 is there a way probably we could reimagine the overall interaction layer or the customer experience layer that you have, the digital journeys that we have today? One example that you gave was that combining, let's say, intelligence stack and with the voice AI on top of the journeys, which actually we do, right? What Revrag is trying to do, right? But is there a way, or is it something that uh, people are trying to do uh, in terms of how to use Gen AI in not just internal aspect of a company, but also the customer experience point of view, new journeys overall, reimagining all of it.
So you rightly said. See, focusing only on the internal productivity gains would be a opportunity lost, and not only that, it will be a strategic mistake.
Mhm,
Um, because that would make banking just a back-end utility rather
mhm,
than a customer-centric partnership.
mhm,
After almost century of banking in a traditional manner, now we have the two layers of DPI and AI to truly create a customer engagement layer or reimagine the customer experience from scratch where true potential lies.
mhm,
See, productivity is the floor which
mhm,
everyone eventually will stand on,
mhm,
but reimagining customer experience will act as the ceiling. It is
Mm-hmm.
the sky which only up to your imagination and your execution will define what height you can take your customer experience to.
Mm-hmm.
I'll give a very simple example. Imagine an autonomous call
Mm-hmm.
by a voice agent
Mm-hmm.
calling a small merchant and saying, "Hey Ashutosh, you have consistently high balance surplus in your current account.
Mm-hmm.
I don't foresee any large spend coming in basis my understanding of your last year's business cycle. Would you like me to move this fund to a
Mm-hmm.
high interest sweep in FD to match your upcoming advance tax payment?
Mm-hmm.
And don't worry, in case any check or EMIs or any standing instructions which still come, they will still be honored in case of any shortfall."
Mm-hmm.
And all of this will happen in a truly multilingual environment. So if Ashutosh speaks Bengali, the agent will call in Bengali. The language brings a lot of trust. People feel much more comfortable and have an additional factor of trust when you speak to them in the same language. But most of the digital interfaces in the financial ecosystem are built around still primarily around English,
Right.
where people who don't are or are not very well versed with English can only understand vernaculars. They have a trust deficit when they come on such interaction touch points.
Right.
Voice based AI can bridge that gap.
Absolutely. And
Think
you are
about,
imagining this on top of your journeys, which are there right now, correct?
yes.
Or is it some like so there is a journey as of now which is in English, and you are thinking that okay, voice layer can come on top of the journeys that is there.
So I'll tell you a very interesting thing. Last year, in account aggregator, I realized that because consent is such an important piece and DPDP were
Right.
becoming an act,
Mm-hmm.
I asked all my account aggregators, including FinView, which you work with,
Right.
that all my consent pages should be
Mm-hmm.
in at least 8 large languages, which cover 97% of Indian population.
Makes sense.
So, our and this year we are going one step ahead. We have already started the work. I've already started the work towards enabling a voice-based consent
Makes sense.
in that vernacular language. Because
Mm-hmm.
the idea is if a customer is taking a journey, he should
Mm-hmm.
understand what he's signing up for.
Absolutely.
And this is where you create trust.
Right.
Imagine a small scale vegetable vendor understanding only Marathi
Mm-hmm.
and then banking with your bank, and the bank calls him
Mm-hmm.
and says, "Do you want to understand your income this week?" And the and that vegetable vendors simply ask a question: "How much did I earn this week, and can I pay my supplier 5,000 rupees tomorrow? I have to go to a mandi."
Mm-hmm.
The AI can read the DPI transaction data from account aggregator
Mm-hmm.
and answer instantly in Marathi. This is just not a productivity gain item. It is a total expansion of that addressable market, because that
Mm-hmm.
vendor who is earlier more comfortable keeping his funds in cash, once he knows that he can get real time information in his language and access his money, the information about money at any point of time, he would be more comfortable keeping those funds in bank in a more secure manner.
Makes sense. No, no, I absolutely agree. The point that you uh, mentioned about building trust through vernacular languages, right? Which is a very key important factor because what we have seen and what we have learned around the market is that there is a huge drop off, there is a huge uh like non-adoption, I would say, right? That happens or drop off that happens due to intimidation of English that is present
Yes.
on these journeys. Right? Because see, tier two if there is a person who is tier two, tier three, or tier four person who is coming on an HDFC bank and an ICICI bank or an SBI bank using these banks in English, there is there is a problem they face, right? If it is in their vernac, it is easier for them to basically understand and build more trust around it, right? If a relationship manager calls them in their language, right, that's where the more trust builds, right? So my next question is, now that AI is here and everything is getting changed, so how do you imagine relationship management also getting changed, right? Don't you think that there are still bottlenecks that are there in relationship management into today's banking environment, right? Uh, how do you how do you think that overall relationship management will be changing in the AI world?
See, there was a survey done recently,
Hmm.
and I am not able to recall the name of the survey, but for a human, a average Joe to trust AI for key financial decisions, that may not happen immediately. But for a human to trust another human who is augmented by AI, who is using AI at backend to make decisions, would be far easier. So that
Hmm.
relationship management will change. Relationship management will change from a simple product pusher
Hmm.
to someone who can, or someone who just currently facilitates the transaction, to an actual financial strategist who can handhold the customer, understand their needs, their current finances,
Hmm.
and then that RM uses the DPI data, the customer conversation which he has gathered, and the AI intelligence layer using bank system, and fill that need gap with the right offering.
Hmm.
And that right offering with a human interface with data backed intelligence, that is what will build trust. And it can be a win-win for the bank and the customer, and also the relationship manager.
Hmm.
When AI starts handling the mundane front end queries eventually, for
Hmm.
your any kind of problems, you call your virtual relationship manager, which is currently a human, will be a voice based agent. He will resolve that.
Hmm.
But where you need a true decision making, where there is some kind of empathy or emotions which are also involved, because money comes with a lot of emotional angle also.
Right.
That's where a trusted RM can help the customer make the right decision. And that's what will make bank move from being a place where people just keep money,
Hmm.
but to a coach and advisor that can help them grow their wealth. That's how customer will start seeing the bank. And see, one of the another key aspect I want to highlight here is, while the world is moving very quickly in AI, and sometimes there is a lot of conversation which happens that India is getting left behind in the AI race behind China and US, but India can still catch up and eventually lead this global AI revolution with real, actual, tangible use cases because of our inherent strength of DPI around DigiLocker, Aadhaar, UPI, ONDC, account aggregator, and now upcoming innovations from RBI Innovation Hub. See, we have a billion plus Aadhaar. We have more than 600 million DigiLocker registered. And there are almost 9.5 billion documents which are issued on that. Now we have CKYC 2.0 coming, which has more than 1 billion records on Sarsai database. So we have the ability to do identity authentication basis face match algos, which I just spoke about few minutes back, and enable real-time fulfillment. And India
Hmm.
need not necessarily win on LLMs, but we need to focus on homegrown Trinity models. What I call a Trinity model is SLM, which is built on a context rich vernacular language,
Mm-hmm.
domain specific knowledge, and a
Mm-hmm.
very specific task orientation. And we need to
Mm-hmm.
build many of them, these SLMs. I'll give you an example. A credit underwriting SLM built in
Mm-hmm.
Bengali with full
Mm-hmm.
understanding of microfinance domain
Mm-hmm.
can do a sharper underwriting in the local market
Mm-hmm.
than any fine-tuned LLM.
Makes sense.
And it can run at low cost. It can run at endpoint devices such as smartphones of the RM or even of the customer, and it will still have a sizable segment to address. So these are
Mm-hmm.
the smart choices we need to make.
Mm-hmm. Absolutely. I think I'm just feeling that there is so many opportunities with AI, right? There is so many things that probably we can do. The things that you said about SLM, the Trinity model idea. I think there are so many things that we can do. So now AI is getting almost getting adopted at a very high speed in enterprises, in BFSI specifically, as we are seeing and working with a lot of BFSI. So now that there is AI who will be making a lot of decisions for the customer, how do you ensure that while the framework becomes more automated, the bank doesn't lose the uh, human centric soul, which we today kind of have as a relationship manager, right? So, our uh, will bank lose the human centricity because uh, there were you can say there are still branches that are there, right? There are still people visiting branches, but will AI decrease that human centricity in a bank?
See, it depends on how each institution takes call to execute the final human experience. So there will be a lot of invisible journeys where AI will make more decisions.
Hmm.
And I just mentioned that customers may not inherently trust AI, but they may still trust another human using AI. Earlier last year, the around 15th of August, there was a report, a free AI committee report around fair usage of AI in India
Mhm.
under the guidance of RBI, IIT Bombay.
Absolutely. Yes, yes.
Yeah,
Last year itself.
yeah. There were
Yes.
seven sutras, 26 principles. And when you read that report, you realize, and there is one factor which comes again and again in that it is about explainability
Yep.
and trust.
Hmm.
See, trust is lost when a machine says, when a voice agent says, no,
Hmm.
I cannot fulfill this for you. You are not eligible for loan. But no one can explain why, as the
Hmm.
underlying model is a black box.
Hmm.
That's where human interface comes in. That's where
Hmm.
that soul, that human centric soul which you talked about comes in. That if an AI denies a loan during an invisible journey, the customer should not get a generic error code without any further course of action. They should receive a proactive, helpful nudge. Well, we couldn't approve this today. Like, because your GST filing show a temporary dip, let's visit in 30 days or try this smaller credit line. Or I'm willing to approve you something else. Or would you still like to discuss other possible funding options or borrowing options with your RM? There may be some other product which that model is not able to assess, but still there is a always creative judgment which human can bring once they understand the problem.
Right.
So decision making augmentation using AI is important for financial inclusion, but making it as the final decision making layer will also create financial exclusion. So the model which needs to be always, at least in financial services, should always be a human centric, human in the loop model while implementing any AI.
Absolutely. I think one thing that uh, I really believe is that there should be a proactive layer to it. Today, what we are trying to do is that whenever a customer is on a loan offer page, right? And they're confused about, I applied for a 3 lakh loan, but I'm only getting a 1 lakh loan. What is the reason behind that? What is, why are you charging me this processing fees? Why are you doing that and this? And if it is a N2C customer, uh, then uh, then it becomes important to explain them proactively that okay, see, you are not eligible for this because of such reasons, right? And then also, if let's say they want to negotiate, because people do want to negotiate, I have applied for 3 lakhs, how are you giving me only 1 lakh? Can I probably apply for multiple and you can give me that 3 lakh, right? So I think there should be a way to help that person who is in need to get that money, who is applying for a loan. And there can be AI which can be used with a human in loop power to negotiate as well if there is a case arises to help that customer, right? So I think, yeah, I totally agree. And we have been doing such cases with few of our lenders whom we work with, right? Providing the in-app AI agent inside the funnel, inside the journey, on top of that journey, guiding the customer, right? I think you're absolutely right. And it should be proactive because, see, if we are not proactive, then that customer will eventually drop. And then you will try to call that customer, try to bring that customer back, which is which is a harder sell for him as well, which is a harder sell for you as well, right? As a bank or as a big financial service. I totally agree there.
See,
Uh, so, yeah, go ahead.
as you said, now we need to be proactive. Now, assume, and I'm going back to again here the account aggregator example because that is something which is still very, very untapped. A customer comes,
Hmm.
you have visibility to all his bank accounts, and yet
Right,
you are able to offer him a loan of that 1 lakh, but he needed 3 lakhs.
right.
The customer education about products like loan against securities or loan against mutual fund is so poor in the industry that his
Absolutely.
need is 3 lakh. We are underwriting him on the basis of cash flows and able to give him 1 lakh. But if he has used my account aggregator services, linked all his assets, proactively I can tell him, hey, I may not be able to offer you a personal loan of 3 lakh, but we can
Absolutely.
give you a loan against security of 3 lakh because you have
Absolutely.
5 lakh or 10 lakh worth of mutual funds line. Would you like to take it? It
Absolutely.
is at a lower interest rate because it is a secured loan.
Yep, yep,
That's
yep.
where proactiveness comes. The customer doesn't care whether he is getting personal loan or a business loan. These are the product names created by us. All he cares about whether he's getting funding when he's needing it.
Absolutely. I totally agree there. And there is like people don't know about all of these things, right? People don't know if I can take loan against securities, right? So I think you're absolutely right. And account aggregator combined with AI and proactive approaches can help the customer to get funding whenever there is a need. And there are a lot more other opportunities
Yes.
that can be unlocked. So as you are very deeply into DPI and uh, plus AI, right? What do you think? What is the next big pilot program which will be getting scaled uh, in next 2 to 3 years? We have seen UPI, we have seen FASTag. Is there any other thing that is coming along?
See, two things which I have been working and dabbling on for last 6 months. One is tokenization of financial assets.
Mhm.
So there are billions of worth of Kisan Vikas Patra, small saving instruments, NSC, etc., which are locked. And when people, especially in the Suru market in tier 3, tier 4 towns, who have saved their money in these small saving instruments in post office deposits, when they want to take it out, they sometimes do either premature redemption, or if they don't want to take them out, they go and simply take a loan at a very high, sometimes usurious interest rate from MFIs from unregulated financial entities in those markets. Now, this tokenization of the financial assets will eventually lead to fractionalization. So, if there is a large
Right.
deposit you have and it is still 3 years worth of redemption pending or maturity pending, 3 years to maturity, the ability to fractionalize it and tokenize it enables that individual to take that asset anywhere and not only link to a post office and get a funds or short term fund against it. And because it is
Mm.
secure, he will be able to get it a much lower interest. And second thing which we have already touched multiple times is account aggregator, which I strongly believe is a true game changer. It
I
can be a
too. Yeah.
national
Yep.
standard because we have been talking about sessionization of savings, loans, investments, microcredits for almost a decade now. But
Hmm.
the cost of servicing is a hurdle to drive all of this at scale.
Hmm.
But with account aggregator and AI, any financial institution can build a wow experience even for a small vegetable vendor profitably.
Hmm.
With AI at scale, a voice agent can call the vendor and say in Marathi, in Bengali, in his local dialect,
Right.
hey Ashutosh, I see some surplus in your current account this week. I suggest we move these funds to high interest deposit. And when we have weekly surpluses, whenever, later during peak business cycle, when he has to actually procure more items, he has to expand his business, it can again call the customer that, hey, if you need your funds to buy some raw materials, whatever you want to purchase, instead of breaking your deposit, may I create a 1 month overdraft for you? You will
Hmm.
even end up saving 2000 extra in interest by keeping the FD rather than breaking it, because that FD tenure is longer and you are paying slightly higher interest only for that 1 month period in OD. So the cost of underwriting will go down, the cost of collection will go down, the affordability of credit products, the investment products will increase,
Hmm.
and the whole micro finance, not only in terms of lending, which we usually call microfinance, but in terms of savings, investment, insurance, is yet to take off, and it will take off in next 3 to 5 years, riding on the layer of account aggregator and AI.
Makes sense. It was an absolutely great session, and I really enjoyed all the things uh, that we discussed today, Chirag. I think yes, you're right. There is higher untapped potential in DPI plus AI. There is proactive approach that we should for sure use on digital journeys. There is account aggregator plus voice AI, which can be leveraged to build a lot of financial exclusion uh, to the next layer. So thank you for helping us see where the rails are actually taking us. And to our listeners, if you want to understand how to move your institution from digital stack to intelligence stack, today's conversation with Chirag is your blueprint. Uh, thank you for joining Chirag. And yep, we'll see you until the next episode. Thank
Thank
you.
you, Ashutosh, for hosting me. It was a pleasure talking to you.
Likewise, Chirag. Thank you so much. Thanks, everyone. Bye bye.